Are you trying to make money with supply and demand but keep failing? You might be just like me. For years, I've been trying all sorts of strategies, and every single time I kept blowing my account. That is until I truly mastered supply and demand. Because of this, my win rate has been almost 90% for the last 2 years. You can check my X account down in the description below, since I usually post my trades there. So in this video, I'm going to teach you exactly how I trade with supply and demand, so that you can start becoming a profitable trader. Also, I'm going to give you the secret of how I've been able to beat the market for the last few years so consistently. So make sure to watch until the end. So first, we're going to learn about what supply and demand is. Then we're going to learn how to quickly identify them. And finally, I'm going to show you some real-time examples so we can see how we apply them. Now, what is supply and demand? Supply and demand is usually when there's a higher likelihood of buying and selling pressure. As you can see in this chart, these areas are where you can find the most buying pressure. These are areas where there are clearly a lot of demand. Supply, on the contrary, is where you can identify multiple areas of selling pressure, or areas with a lot of supply. Now let me be clear. Supply and demand does not have any predictive power. Let me say that again. Supply and demand does not have any predictive power. Many others will tell you that this is a perfect strategy that will always hit, but the reality is that it will not. Supply and demand is purely subjective to the trader, you. You might see an area of demand and supply on the 5-minute chart, while someone else or a hedge fund might see supply and demand on a 1-hour chart. At the end of the day, demand and supply is only used to control risk. What will turn you from an unprofitable trader into a profitable trader is the proper use of risk management. Now, what do I mean by that? Every trade should have a thesis. No, you don't have to spend 30 minutes analyzing a trade or a chart. In fact, it should take you no less than 5 seconds to identify supply and demand on a chart. Your thesis is the invalidation zone. What do I mean by that? So up here, we have a supply zone. And down here, we have a demand zone. Like I said, this should take you no less than 5 seconds to identify. It's going to be the most obvious areas of demand and supply. So remember what I said. Every trade needs a thesis. So what is our thesis here? Clearly we can see that price has been respecting these zones, our supply zone and demand zone. We believe that the price will respect the supply zone. In this case, we're going to place our stop loss above our invalidation zone. I say invalidation because once the price passes the stop loss, at that point, the price has already invalidated our thesis. Because remember, our thesis is that the price will bounce off of the supply zone and bounce off of the demand zone. If our supply zone has failed, then we have no reason to stay inside of this trade. All you need is a 1-to-1 risk ratio. That's perfectly fine. Now, another thing that I have to stress. Supply and demand zones are zones. They are not lines. No chart will ever perfectly bounce off of a supply or demand line. So you need to treat it as a zone. Lines make for a very weak risk structure. Demand and supply zones allow a lot more breathing room for our thesis to succeed. Now remember, the best supply and demand zones are the ones that you can identify in less than 5 to 3 seconds. They are the most obvious areas that you can draw the zones. Now, the strongest supply and demand zones are the ones on the highest time frames, because they will give you additional confluence for your trades. The closer you are to a supply or demand zone on a 4-hour chart, the better. All right, so we're going to start with a real-time example, so I can show you how we're going to apply this concept. Remember what I said, the best supply and demand zones are the ones that are the most obvious to you. So, in this case, we can see this is a supply zone. Down here, we have a demand zone. There's also some confluence over here, because you can see there's a lot of buying up here as well, over here. Next, you need to wait for the price to reach a supply or demand zone. So that's what we're going to do. We're going to wait. Now, guys, you don't have to strictly stick to this demand or supply zone either. If you clearly see that the price is starting to form new areas of supply and demand, you can certainly use the most recent ones. I can maybe see a supply zone up here, but we need to wait and see what happens. So check this out, guys. Like I said, if you're starting to see a supply and demand zone early on in the more recent time frame, you can start to draw them out. And now you want to remember to remove your previous ones because having too many on the chart is going to confuse you. So in this case, we can see that there's a demand zone down here. Now, I could potentially wait for it to come lower, but the best part about using zones are that it gives you plenty of room. It gives you a lot of breathing room here. Typically, you want to find the lowest point of the lowest candle and pull it up to about here, I'd say. Doesn't have to be perfect. Again, it's just a zone. It's very subjective. So let's assume I place a trade here. Let's see what happens. There you go. Now, check this out, guys. Like I said, we have a demand zone up here as well, or supply zone, I'm sorry. So what do? Once we're out of this trade, we just wait until it comes to the supply zone. Let's place our stop loss just above the supply zone. And let's see what happens. Here's our second trade. Okay, so our stop loss was hit. Now remember, the reason why we have our stop loss here is because this is an invalidation zone. That means that the price action has now invalidated our thesis, meaning this is no longer a supply zone for us. So what do? You want to remove it because this is you're no longer looking at this one. So now we go back to this one. This is the next supply zone. So what do? You just wait till the price reaches the next zone. So what I'm looking for is another potential buy down here or a sell up here. Let's see what happens. Okay, so good thing we did not place a trade there because you can clearly see it has now broken the demand zone. So now we look to our left. Where's our next demand zone? Our next most obvious demand zone is down here. Let's see what happens. Okay, guys, so check this out. There's another supply zone up here, right? So let's see what we can do here. If I can just catch it on time, but sometimes you miss them, and sometimes you're on time. It is what it is. Close. All right, so in this case, guys, you can see how wide our supply and demand zones are here and here. So, guys, sometimes it's okay to just make it pretty wide, you know? Just keep it 1-to-1. This is on the 5-minute chart. It's not going to take that long, right? So, let's see what happens. Look at that. It bounced off our supply zone. And there you go. It hit our take profit. So guys, you're not going to hit 100% of your trades. That's not how this works. Trading, you have to accept that there are going to be losses. You just need to make sure that your profits are more than your losses. Now, how can you control that? Well, let's say you're not confident about a certain trade. Guys, as soon as let's say this was the inverse, right? I was betting up for some reason and I see that it's starting to go down. Guys, you can just close early. If it looks like it's about to go against you, you can close early. Now, because you guys watched until the end of the video, I'm going to show you guys what my edge is to be able to beat the market so consistently. So pay close attention. First, I will always identify a supply and demand zone. Remember, this is purely subjective. My demand zones might look totally different than yours. And remember, you must have a thesis, so stick to it. Next, when I know that I'm about to enter the trade, here's the trick. I enter with only 1 to 3% of my portfolio balance. 1 to 3% of my portfolio balance and no stop loss. Yes, you heard it right, no stop loss. Guys, stop losses are what's making you lose most of the time. You ever notice how sometimes you enter a trade, it hits your stop loss, but it jumps right back into your TP, but you missed out? Here's the main problem. You guys are trading with too much of your portfolio. Trading with 10 to 20% of your portfolio is insane, and you are guaranteed to blow your account. Instead, if you just trade with 1 to 3% of your account each time, with no stop loss, that gives you room to double down on a trade when it goes against you. And you'll see just how quickly your account grows. Did the trade go the wrong way? No problem. Just add another 1 to 3% at the next demand and supply zone, and watch how the overextended price reverses back into profit. So guys, if you want me to explain this further with examples, make sure to like, subscribe, and comment.